Business reporter Ed Boyd now, who was in the room at that Morgan Stanley event. Ed, we couldn't quite hear the questions. Not our fault. The audio wasn't great on the questions. We could hear Governor Philip Lowe, but take us through, you know, the mood in the room, what everyone wanted answers on from the RBA Governor.
Sorry, Laura, there's a bit going on here in the room. The next event's about to start. But look, it was a packed house. It was standing room only at the back. I'd estimate there were hundreds of people in this room listening to Governor Lowe. There was another speech on beforehand, which was just as busy. But everyone was clearly here to see the Governor, to hear what he had to say. Obviously, the bank raised interest rates yesterday to an 11-year high of 4.1%. And the speech today was pretty downbeat from Governor Lowe, basically outlining the narrow path that our economy's on and the challenges that we're facing. The Q&A you mentioned went for about 25 minutes, so it was quite a decent, chunky Q&A session with Governor Lowe. And the media did get a chance to ask some questions, and one of the things that I wanted to ask Governor Lowe about was last week's Fair Work Commission ruling, where they're increasing the minimum wage to about 2.5 million Australians by 5.75%. And about 180,000 Australians will get an 8.6% pay rise. One of the big fears for our economy is the wage price spiral. Wages go up, people spend their wages in the economy, keeps inflation high. That's what Governor Lowe is trying to avoid. Treasurer Jim Chalmers yesterday said he's not expecting a wage price spiral for Australia. But I put the question to Governor Lowe just a short time ago whether the Fair Work Commission's ruling has increased the risk of a wage price spiral. Take a listen.
It was higher than we had factored into our forecasts, as I said in my prepared remarks. How much it adds to the inflation outcomes really depends upon whether it spreads across other parts of the labour market. The share of the labour force that's covered by the award increases is still fairly small. The concern would arise if the 5.75% increase became a benchmark or a quasi-benchmark for outcomes in private sector wages more broadly. I'm really hopeful that doesn't happen, and the big increase last year didn't become a benchmark for other increases. So we have some experience here, but the longer these big increases go on, the harder it will be for wage outcomes in negotiated agreements to stay where they are. So it's a risk factor we're monitoring, as I said before, the solution here is stronger productivity growth to underpin big increases in nominal wages.
So Governor Lowe there basically saying he was surprised by last week's Fair Work Commission decision by how much the minimum wage has been increased. But Laura, another big theme of this speech today was inflation remaining persistently high in Australia, and he really outlined the bumpy path ahead for our economy if inflation remains elevated. This is what he said about inflation.
I want to make it clear, though, that the desire to preserve the gains in the labour market does not mean that the board will tolerate higher inflation persisting. There is a limit to how long inflation can stay above the target range. The longer it stays there, the greater the risk that inflation expectations adjust, and the harder and the more costly it will be to get inflation back to target. If inflation stays high, this will damage our economy, and all Australians will feel the effects of this.
So, Laura, one of the solutions for our economy, which you were just talking about just before I came on, was improving productivity growth in Australia. It is a difficult thing to be able to do. A lot of politicians and economists have been trying to say how to do it, and no one's really had the right answer yet. But Governor Lowe basically said if we don't fix productivity, our economy's going to stay in trouble. We've had flat productivity growth since 2019, so roughly 4 years, and that is one of the things that we need to desperately turn around to fix our economy and get it back on track and get interest rates back down to manageable levels. So this is Governor Lowe on productivity growth.
Ongoing strong growth in unit labour costs would underpin ongoing high inflation outcomes in Australia. Now, the best way to achieve a moderation in growth in unit labour costs is through stronger productivity growth, which would also underpin durable increases in real wages and our national wealth, and would make more resources available to fund the public services that we all value. Unfortunately, growth in productivity has been weak over recent times. Indeed, as you can see here, the level of output per hour worked in Australia today is the same as it was in late 2019.
So, Laura, that's some of the highlights from Governor Lowe's speech, and obviously it comes ahead of the March GDP decision for quarterly growth. Will be coming out in just 45 minutes, and economists are expecting a pretty weak start to the year for our economy, and there's even a chance we could see a negative reading in the first quarter for our GDP.
Yeah, OK, we're keeping an eye on that. Ed, thanks so much persisting under difficult circumstances there at that Morgan Stanley event, but certainly really interesting speech from the RBA Governor Philip Lowe. His words are like bullets for the markets and every single mortgage holder hanging on every word. It wasn't all good news this morning.